So as we get to the end of this investment course, I need to quickly teach you how to develop an investment plan. So the purpose of knowledge is to get an understanding of the different investment vehicles that are available to you in Nigeria. And your final step is to now develop an investment plan for how you're going to deploy the seed capital that you have. So I have a template for you in downloadable resources. Please go there, get the draft investment plan. So what I'm going to be doing in this video is to explain the different steps. So before you begin, just a recap, remember you can't invest your way out of poverty. So this course assumes you already have disposable income from your savings. So you've been able to meet your day-to-day living expenses and you have something left over or something that you've saved, and you now have some seed capital to invest. So if you're not yet at that stage, you need to go through the saving stage where you set aside 5%, 2%, 10% of your monthly income every month. And if you don't have any disposable income, you need to increase your earning potential, or get a better job, or start a business, whatever it is you need to do to get to the point where you have something left over every month that you can save and build seed capital from. Number two is, I'm assuming you've learned about your investment options, you've taken my course, you've watched free YouTube videos, you've Googled terms you don't understand online, and you've also done your due diligence on those investment options. So with the investment options that you've been seeing flying around on the internet, you've used my risk assessment checklist to be sure that these are credible opportunities. So I'm assuming you've done that. And then I'm assuming you're prepared to practice delayed gratification. So you believe in the principle of, compounding. You've read the 5x5 wealth plan, how to develop wealth in 5 years. You're ready to practice some delayed gratification such that instead of eating your seed, you keep compounding your principal and your returns for long-term wealth. So here's the breakdown of the investment planning document. The first thing is to state your objectives. Are you trying to develop an income plan? So for example, if you refer to my investment cascade model, is that what you want to do? You want to be able to generate income on a monthly basis, or are you trying to save or invest towards a project? So it's a 5-year project, 3-year project, or are you setting aside an endowment fund for your children? So it's more of an inheritance. State your objectives clearly because it determines what kind of investment you're going to be contributing to. Would it be high risk, medium risk, and is it going to be short term or long term? So state your objectives clearly, state the timeline, and state the target amount. Those two things must be clearly enumerated and must be measurable. Now, number two, state your risk appetite. So if your risk appetite is pretty low, then it means it's going to take you a longer time to meet your objectives, because obviously you're not going to invest in any high risk or high income vehicle. Remember what we said at the beginning of the course? Risk is usually directly proportional to reward. So the less risk you're willing to take, the less your reward, and the higher risk you're willing to take, the higher your reward. So if your risk appetite, once you state your risk appetite, it then guides you on the kind of investments you would be open to and the time frame for your reward. Set a budget. What is the initial capital you're willing to invest, and then how much do you want to add over time? So your seed fund is the initial capital. Your growth fund is how much do you want to top up every month or every quarter or every year. Put those down in Naira and Kobo or in dollars if you prefer to dollarize your investments. And then choose your investment options based on the risk profile you've already stated and based on the objectives. So for example, if you have a very low risk profile, you'll only be investing in government securities, government bonds, money market. If you have a medium risk profile, you may look at insurance because it has some, you may look at agriculture because it has some insurance backing. If you have a very high risk profile, you can look at things like stocks, cryptocurrency, venture funding. So based on your risk profile and the objectives, short term, long term, medium term, Write down a list of possible investment options. Then identify relevant platforms and partners in those areas. So for example, if you're looking at a basket of funds, you really don't have the time to really go out there to look for different investment platforms, then you could consider maybe a volition, for example, my private equity company, or the cooperative arm of the company where we invest together as a group. So we provide the due diligence report, we vet the legal agreements, we do a lot of all the initial legwork, even though at the end of the day you must still do your final leg of due diligence and take responsibility. So you could look at those kinds of platforms, or you could approach a stockbroker if you're interested in stocks, or go to an online platform where you can trade yourself. You could sign up for a cryptocurrency platform, explore agriculture funding. So once you identify the investment options, you then need to list beside those options the platforms and the partners you're going to use. Then identify training gaps. So after taking my course, if you still feel you need to do more training. So for example, when I talked about the stock market, I said, how do you do trend analysis? You may just want to take a 30-minute course on how to read candlestick patterns. You don't need to go into details. You're not a professional day trader, so you don't need to go to technicalities of Bollinger Bands and all of that. You may just simply need to learn how to read candlestick patterns, and that could be the way you conduct your trend analysis, for stocks or for cryptocurrency. So identify any training gaps that are left, especially if you're going to be managing your investment yourself and you're not going through a private equity company or a cooperative, and then build, or rather fill, those training gaps. And then finally, execute, monitor, and document. A lot of people don't monitor and document their investments. I've provided an asset register template for you in downloadable resources. So please, every month update your asset register documents, because what you put in to a platform in month 1 may not be the value in month 3. So document. Remember, your will is something you only document maybe every year or every 2 years, but your asset register is updated monthly. So your spouse or your next of kin will be able to tell the current status of your investment at least up to a period of a month. So your asset register is where you really document. And sometimes you may just want an overview. You want to know what is your net worth at every point in time. So you go to your asset register, what's under agriculture, what's under real estate, what's under money market, and at a glance you get a sense of your net worth. Also put contact details for every single investment platform on your asset register. So if anyone needs to access your holdings or your investments, they can clearly see the name of the company, they can clearly see phone number, email, who is your account officer there. Your asset register also has all your bank accounts as well, with relevant contact information. So not only should you execute your investments, you also need to monitor and document those investments and update on a monthly basis. In terms of the asset class, remember I said choose based on your risk profile, choose which investment. So for example, you could say, I'm medium risk, so I'd rather go with real estate because it's something I can see. Agriculture again, because it's something I can see. And then I might do a little bit of high risk. So I'm not going to put a lot of my money into high risk. I'll just put like 10 or 20% or even 5% in cryptocurrency. And that will be my my Hail Mary, or my adventurous fund, So decide what the percentage distribution is going to be. And even within a particular asset class, so even within agriculture, you could still spread your risk. You could say 50% in crowdfunding, 30% in direct farm funding, 20% in cooperative funding. So within one asset class, you can still break down even further to the types of investments you're going to be doing. And even within agriculture, you can break down by type. So you may decide, I'm not putting all my money in rice. What if there's a flood, in the farm that I've invested in? So I'd rather do rice, do poultry, do cowpea. So I'm spreading my risk by, crop, or by livestock, So these are some of the ways that you can look at your investment plan. And of course, if you need hand holding, you can book my custom investment coaching class. Just send me an email requesting about it, or go to my website, www.subomiplumptre.com/coaching, and you can book a customized one-on-one investment planning session. So thank you, and I wish you all the best on your investment journey.